Welcome to the Forex, and here we're looking at the US dollar. The count that we've had for this was basically looking for a corrective move back up into the 80-20 area as such, and we do have a three-wave correction here, which is good, and from that point we'd expect it to roll down here further. However, it's not really sort of giving us an impulse wave to the downside. This first move down through here is in three waves, so that makes it the move down bullish corrective, and a new high would be made above here. So it's a bit of a dilemma, this one. This one here is in three waves. It's a bearish picture here, so that's fine, and we've got that move down through here. So look, it could continue down here further, and as I mentioned before, you know, finding the 79.72 as a retested resistance certainly helps the case for, you know, creates the bearish pattern to the downside. But we're still sitting on support here. This move here is in a corrective wave here. So it could certainly push up from here. It is a bit overbought in this area up through here and here as well. You know, and this pattern here is reflecting back in the euro as well. So the euro is still not giving us a clear pattern to the upside. This is just the 4-hour chart here, and you know, it's overbought at this stage here, and we're looking for it to move further up from here, and the idea was to be, you know, well, positive above the 138, and you know, being long through that, or through group 1 here, and group 1 would be 138, 10, 20 and 30. So yeah, I mean, you know, it should push up from here. But what I was also saying last time too is that this particular move up through here is not really in sort of not a really good impulse wave as such. But you know, I have seen many times with the euro building, it does build like these sort of sharp moves to the upside here. And finding support on 138.30, the top of group 1, is really important for the market psychologically to let go of the 138 and allow the orders to start building up into the 5 numbers here. So we'll see. But look, there may even be a sharp jab down through here again. But you know, as long as the 138 stays as support, then technically the market is up. It's just not showing me, you know, a nice impulse waves to the upside here. Yes, these can be impulse waves up through here, and these can be sort of corrective here. But it's just not a good looking pattern. It's not a beautiful structure as such. That's all I'm saying. So yeah, look, above the 138, then it's positive. In fact, it's positive, supported above the 137.72 here. So anyway, the bias is to the upside. It's just not a good looking picture. The Australian market, just in the bigger picture here on the daily chart here, you know, I need to be quite frank here. This move up through here can be counted in 3 waves as a corrective wave, an A and a B and a C wave here, an ABC correction rally to this point here and fail from this point and roll to the downside. That's possible. However, my bias is to count this as a 5-wave structure to the upside, and this would be a wave 4 pulling back here and still working itself out across the top of group 1 here, the 93 here. So normally the distance above is the distance below that the correction will go. The wave 4 normally pulls back to the wave 4 of 1 lesser degree, which is at the 92 here. So in regards to the levels, you know, as long as 92 doesn't become the retested resistance, if that's the case, then that would confirm to me that we've got a bearish picture, and it'll be taking out these lows down through here. So this 92 is the critical point here as support or resistance. But look, as we see it, this is a wave 4 pulling back, and the 38.2 retracement level was 92.60. So it's sort of hit on that at the moment. So you can imagine that, you know, it would be a positive move to see it move above the 93 here to create long trades. This move down through here has created the market into a pretty reasonably deeply oversold situation on the daily chart. So it has that sort of spring and potential to move to the upside. The count for this here is, we'd been counting these down here as 5 waves down through to here. The B wave we expected to pull back, to the 94, didn't quite get there. And the wave C down through here. So we really do need to see this market move back onto the, well, as quicker as it can do that, the better, basically, because then we know sort of where we are somewhat. But look, I can't say anything. This is either the third wave or the ABC to the top here. This wave here, this move down through here, yes, it can be counted as an ABC corrective move. However, that move can be pull back to the fourth wave of one lesser degree here, and it could also turn into an impulse wave to the downside as well. But I can't confirm a bear market until we see a larger structure of 5 waves, or we see 92 as a retested resistance here. Like I said, the daily has got this deeply oversold here. The monthly is showing us a bullish picture as well. So look, we just got to sort of work through this. We don't have a long trade set up here. The other important number here, of course, on the intraday level is 92.72 here. If I can just drill in here a little bit further. This number this whole group really, but this particular number here, as time goes on, will be important here, and you can see that. And I did mention that earlier, and you should know that anyway. So, so it's currently 92.60 was our target. That's been hit. We can see a bit of a 5 waves up here, but it's got overlapping wave structure, so this can be counted as a corrective move here. So it could certainly come down. Just nothing to do here just yet, that's all. Right, the Euro Australian. Just looking at on the weekly picture to start with. This particular wave 4 here, we've been looking for a low here, but we also need to be mindful that wave 4s can get complicated, and we could end up with a structure that's larger here. Look, if we get support on top of the 150 here, then we'll be going long, as simple as that. But while this is under here, it's in a bearish picture, and this could even get bigger too here. This could end up being 1, 2, 3, 4 back to here, failing at 150 and coming down through a bit lower there. Sorry about that. The daily chart here, look, same story, is that we can have the A, the B, and the C wave here, and intermediate wave 4 being here. But to confirm that, we really need that 150 here as support here, because that would also give us overlapping wave structures with wave 1 here as well. So that's what we're looking for here. The flip side of this is that the whole move down through here could develop as a 5 wave structure in terms of the 1, the 2, this being the 3rd here, the 4th pulling back, not finding support here on the 150, but getting either where it is now or here, and then wave 5 here. If we get 5 waves down here, of course, then after 5 waves, we'll get 3 waves back up, and then we'll get another 5 waves down. Same size as this here. So that's what we're looking at. So just sort of drilling in here a little bit, we just need to keep a bit of an open mind. So we're looking at this potentially being a wave 4 here. Even be just done and dusted right here, right now, and work lower from that point there. But we'll get some confirmation on that. Just drilling in here a little bit further. This is how I've got it counted for that wave 4 here in terms of the A, the B, and the C here. So it does look corrective from this low here, the A wave, the B wave here, and the C wave up here in 5 waves in terms of 1, 2, 3, 4, and 5 here. So it can work lower through here. This does appear to be sort of corrective here, so it could certainly push up a little bit here. So look, we're just really standing on the side and just waiting for that to prove itself. Look, if the 149 becomes the resistance and retested resistance, well, then you could probably look to short and keep the stop above here. But you're trading against that sort of short-term trend, and we haven't confirmed the situation just yet. But look, the markets on the daily are definitely overbought in this situation up here around this zone here. So it's highly likely that we'll see them at least have a larger correction across here at minimum. The pound yen, the pound yen and the euro yen, are in these sort of pretty complicated triangle patterns as such, coming across here from wave 3 here into wave 4 over here, and we've got the A wave, the B wave, and we're looking for the C wave here. C waves in triangles are in 3 waves, and we're looking at that in terms of the A wave, the B wave, and the C wave moving down through to here. With that in mind, we should see this move down through here. It is overbought in this situation up in this zone up here. The 72 has become the retested resistance, so it does open it up for short trades. As such, if the 72 became the support here, then we would need to be long from there. We need to be on the right side of 72. That's just how it plays out from that point there. Just sort of drilling in here a little bit further, we can see the 170, 172 here being the retested resistance. So you could probably short new lows coming into this area through here, keeping the stop above here, looking for longer term lows here. We've got an impulse wave down through here in 5 waves, and then we've got a corrective move back in the retest of 72 here. So we're looking at another 5 waves here at minimum. So basically an A and a B and a C at minimum, but that can just roll out into a larger picture to the downside as well. And the euro yen is the same. In fact, the euro yen is probably a little bit weaker, but it's got really good support. So we've still got this sort of triangle pattern that's happening across here. And you can see in this area here that it's quite complicated through here as well. It's the same as the pound yen. And we'd be looking for wave C to move down through to here, based off this from this low here, this move back up here being corrective in 3 waves. And this is the 3 waves here, the A, the B, and the C here. So we'll look for that 50-60% retracement level back into the 142. And then we're looking for this to move down further. I understand that there's very nice, strong support on 141 here. And we've got to bounce off that. So we just need to see how this bounce pans out. So keep an eye on that. So if you see a breach of the 141, well, then you know where you are. And we'll be looking for a move down into 140 for another bounce back up here as well. So like I mentioned before, not very good trading in this particular market. Alrighty, that's that. Cheers.